put us back on an inflationary track? I don't know. It's probably going to take, the answer is probably no. It's probably going to take a massive reliquefaction of the money markets. I'm talking about a combination, an unholy combination between Powell and Janet Yellen, head of Treasury, to once again monetize multiple trillions of dollars in debt to get the economy back, on its footing. And that is going to be intractable stagflation, not a normal economy. It's not going to be a normal rebound because, again, remember, we just finished 8.6% inflation. If you tell us that you're going to go back to the playbook of 2020, of January, February of 2020, it's game over. Inflation will never come down for a very, very, very long time. It'll run intractable.
So that is an impossible choice for the Fed. And they can't do something in the middle because it's going to be ineffective. And will they just bite the bullet and say, all right, we'll just have inflation for a generation like everyone else in the world? And what's that going to do to all the other countries in the world, as well as China, which seem to be collapsing as quick as the United States, or perhaps even quicker?
I read Bloomberg is probably the best of the, I call it the amoeba with the highest IQ as far as the mainstream financial media. Bloomberg actually did a story that June had the highest credit impulse from China in the history of that red nation. And I'm thinking to myself, wait a second, didn't we just have a collapse of Evergrande, not too long ago? I mean, this country was collapsing because people could no longer afford the real estate market. They couldn't build any more bridges to nowhere. They had a massive fixed asset bubble that the government of China was finally addressing. And now they're borrowing and printing like never before. It's just mind-boggling what's going on.
And the yuan is sinking against the U.S. dollar to levels really never seen before.
And it's not even a free-floating currency. Imagine if it was actually a tradable currency.
Can't imagine. So it's bad all the way around. There's no bright spots in the world, are there?
There's never been a time 80 central banks around the world are tightening monetary policy. 80. Into a global recession. This is the worst. And I said this, by the way, in July of 2021. I said 2022 will be one of the worst bear markets we have ever seen. And that is exactly what's happening. And it's not even over yet. I don't think fair value could even be begun to be assessed on this market until the S&P is closer to 3,000. And it's trading at 3,900.
You're talking a deflationary collapse of the economy, which means you need to have cash. Debt doesn't matter because nobody's going to be paying debts in this economy that you're envisioning. Cash is king.
Well, I was saying this, that there's only 4 things that work in the environment that I just mentioned, because the R squared, the correlations all go to -1. Everything trades together except for shorts. Shorts actually work. The US dollar, and treasuries. Those are the only things that work. And treasuries haven't been working that well because they were in a massive bubble. So this is one of the few times when in fact, since 1980, this was a very easy game to play. You understand this?
Sure.
Since 1980, it was a very easy game to be successful on Wall Street. You just bought bonds and bought stocks, and bond prices went up as the yields fell. And stocks were in a skyrocket ship because since 1980, we had nothing but disinflation and a lack of inflation, the way the Fed and the BLS and the government measures inflation.
Sure.
We don't have that problem anymore. You have record high inflation and you have falling asset values. We haven't even begun to scratch the surface on the home price depreciation. Mortgage applications to refinance a home are down 78% year over year. I can't wait for the bank earnings to come out this week. They're supposed to be coming out this week. I think they should be a disaster. It should be a disaster. And forget about, talk about driving me crazy. you can't watch the mainstream financial media. They're talking about in nominal GDP is rising, so nominal earnings should be rising too. Well, I have two things to say to you. Well, what about demand destruction and margin destruction? Let's put that one aside for a second, because you can't just calculate nominal GDP and assume you have nominal earnings growth of 10%. That's ridiculous. And so you have margin destruction and demand destruction. But don't you think we should also calculate in the fact that these earnings aren't buying anything? The earnings have lost their purchasing power. Doesn't that count for anything for Wall Street? So, I mean, we have just begun to price in the worst bear market since 1929, and it might even be worse than that.
Yeah, that's pretty wild. If it's worse than 1929, it's a good thing that these skyscrapers, nobody's working in them, and the people that are, they can't open the windows, right?
Yeah. Well, on a better note than that, I'll tell you this. What is your thought about the non-farm payroll report on Friday? I think it was amusing to me that you have the ISM services index and the ISM manufacturing index. So there's two sectors to the economy, services and manufacturing. Both of those surveys show that employment fell last month, just declined. So where the Department of Labor, the Bureau of Labor Statistics, came up with 370,000 people is utterly amazing to me. And the willingness of Wall Street to accept that establishment survey number is complete sophistry and buffoonery. If you look a little bit deeper, there's something called the household survey. The household survey showed that 315,000 people lost their job. And the household survey always precedes and leads the establishment survey. So yes, we are in a recession. People are losing their jobs. Their home price is about to tank. Nobody's refinancing their mortgage anymore. Bad news for the banks. Year over year, purchase applications are down 17%. The economy is in a recession. 80 central banks around the world are raising interest rates, and the Fed has nothing to do but to quickly get to neutral, at least as fast as they can. There's no meeting in August, so we'll most likely have a 75 basis point rate hike on July 27th. That's what Wall Street has to deal with, along with quantitative tightening, which has just started and ramps up to $95 billion in September.